All right. I know. That time just flies by when you're having fun. Hope you guys had a fantastic holiday weekend. But it's that time of day again, though, here, folks. Time to get back to work. It's Tuesday evening, after all, February the 18th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best entry setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is important because tonight we're identifying the best levels of support and resistance for tomorrow, the best entry setups and targets for tomorrow, and most importantly, the biggest traps to avoid tomorrow. That's Wednesday's trading session, and we have a great video in store for you tonight. We, of course, all the charts are all prepped up, as you can see in the background right now. We get some oil, S&P, Nasdaq, and gold. We're going to break down all the charts in tonight's video so you're ready for tomorrow. And speaking of tomorrow, we also need to grab the calendar because Monday was a holiday, which means tomorrow, a Wednesday, is not your typical Wednesday. So I want to make sure you know the big news events for tomorrow, when to be sitting on hands, and when to put the pedal to the metal tomorrow morning in our trade room. 8 o'clock Eastern time, we open up a trade room. Make sure you guys are all ready for that tomorrow morning. Before we jump into the video tonight, before we break down the charts and get the calendar all prepped for tomorrow's trading session, I just want to remind you, if you're here for the first time right now, make sure you subscribe to our YouTube channel. That way you never miss another great video. While you're down there, don't forget, drop me some questions in the comment section below. And boy, oh boy, if you tune in every evening to watch this video newsletter, always appreciate you being with me tonight. Hit that thumbs up button for me if you tune in every evening to watch this video. So again, first time here, great to have you with me. Subscribe to our channel. That way you never miss this video newsletter. Hit that thumbs up button if you tune in every evening. And if you have any questions, drop those questions in the comment section below. I'll be circling back after we publish the video tonight to make sure we answer all the questions. But in the meantime, though, let's not waste any more valuable time. Let's jump right into the video tonight, starting off first with the news calendar for tomorrow. Take a quick look here at the schedule here for tomorrow, courtesy of econoday.com. Tomorrow, of course, is Wednesday, the 19th of the month. And of course, typically Wednesdays are usually all about inventories. There's usually a couple big news reports that we see on Wednesday mornings. But because Monday was a holiday, pretty much everything has been pushed back about 24 hours, right? So everything's been pushed back here a little bit later on in the week, which means tomorrow we usually see the petroleum status report. That's not going to be till Thursday, right? We normally see the Philly Fed on Wednesday. That's going to be on Thursday as well. So we have a lot of stuff that would typically be on a Wednesday, like a Philly Fed, right? Like an inventory report. We're not going to get that tomorrow because Monday was a holiday. So knowing that everything gets pushed back, what do we have on the schedule for tomorrow? We got two big news reports tomorrow, kicking off tomorrow morning session at 8:30 Eastern time. Housing starts and the PPI number. Both of these news reports are pretty big deals, right? Housing starts, we always know housing numbers have potential to be major market moving events. And we also get that PPI number tomorrow. Anytime I hear PPI, CPI, any type of index, you're thinking inflation, you're thinking gold. So we definitely want to be on our radar tomorrow morning, looking at gold, anything really tied to the US dollar, right? So gold, of course, being one of them, currencies being another one, right? So make sure you're paying attention to that tomorrow morning around 8:30 Eastern time. Now, of course, we then go all the way through the rest of the session and we get the FOMC meeting minutes tomorrow afternoon. Now, this is always a bit of a hit or miss type of news report, these meeting minutes later on in the session tomorrow. And the reason I say that is because it really has a lot to do with kind of how the markets are viewing the Fed right now. So for example, last year in 2019, the Fed was hot on trying to manipulate rates. And so these meeting minutes were usually pretty active news reports, right? As of 2020, though, the Fed has made it pretty clear to us they don't see any reason to be playing around with interest rates, at least until next year. In fact, right, we heard from some Fed speakers this afternoon, right, who basically confirmed that, right? Everything looks peachy keen in the eyes of the Fed, and they really have been very vocal at saying they don't intend to be manipulating rates at all going into this year. What that tells me is I'm not anticipating a lot out of that FOMC meeting minutes, right? We saw how much of a dull response we got from the Fed speaker last week, and I would expect, again, because we already know the Fed is probably not making too many changes, I would be skeptical of this news report, right, being too big of a catalyst. Now, if you do happen to be around your desk tomorrow, around that 2 o'clock Eastern time, again, I'm not anticipating much of a reaction to it, but you know what? There's always potential that something will come out in those meeting minutes that nobody thought of before. I'm not expecting that tomorrow, right? But if you are trading the afternoon session, keep an eye, right? Don't force it though. Again, it's pretty much policy right now from the Fed. They made it very obvious they're not going to be changing rates this year of 2020. Last year was a completely different story, and a lot of these Fed reports made for big market moving opportunities. I doubt that tomorrow afternoon. I will be keeping my eyes on it. Hopefully I get pleasantly surprised and we can see some market moving right off of that FOMC or FOMC minutes being released tomorrow afternoon. So typically I would pay attention, but again, we'll see, right? We'll see. We'll have to wait and see how the market responds right at that 2 o'clock meeting minutes being released here. So really, the news that we know we want to be at our desk and really be focused tomorrow is 8:30 Eastern time. Housing starts and PPI number, all of our news reports, right? All of our markets will definitely be susceptible to moves around the 8:30 number. And don't forget, tomorrow morning, we're going to be in our trade room like we are every morning at 8 o'clock Eastern time, Monday through Friday, and we'll trade this stuff together with all of our clients. Speaking of trading together, let's put this strategy together now for tomorrow. We know what our schedule looks like for tomorrow. I know I want to get to that desk early tomorrow. I also know there's potential for some late session jumps off the meeting minutes, but again, we'll be waiting patiently to see how that plays out. I get the charts already now. Get some crude oil, S&P, Nasdaq, and of course the gold to wrap up tonight's video newsletter. Let's jump into that oil here first of all, the black gold, the Texas tea. Now, of course, as we go into crude oil tonight, I do want to remind you we did go through rollover. We're now on the 2020 contract, right? I should make sure you're aware of this. Around the 18th of the month. The 18th of the month is notorious for crude oil rollover. In my trade room, I tell my clients, as of the 15th of the month, you want to start thinking about rollover, right? Usually somewhere between 16th, 17th, 18th of every 1 month, you're going to get that rollover on crude oil. So you can see here, we have rolled over to that 0420 contract from the 320 contract. And don't forget, we're not talking about contract expiration right now. We're talking about rollover, which basically is the difference between the contract expiring and traders rolling over to the new contract. Now, not to worry, I cover all the details about contract rollover and contract expiration in our beginner classes here at School of Trade. So definitely get registered if you're confused, right, about how rollover and futures works. We cover a lot of those details, right, in our very kind of our orientation videos here at School of Trade. So we know we got rollover, and if you have any more questions about that, just drop me those questions in the comment section below, and I'll make sure to answer those after we publish the video tonight. What do we know about oil, though, besides rollover? We know the market is bullish. We know the market began as a very strong bear move down, but you'll notice here the bears tried once, the bears tried twice, and failed, right, with a beautiful example of a crown reversal or a nested failure pattern, which we talk about quite a bit on this newsletter, right? But we know now the market is bullish, right, after these bears have tried a couple times and failed. What else do we know? We also know we have a pretty strong move. This last leg higher was definitely no slouch, right? It definitely was a very strong move higher. And of course, anytime we see a strong move in one direction, we know we're probably going to see at least a pullback and a retest of the high, if not a pullback and another potential measured move. So we definitely do want to be aware this strong move going higher here definitely gives us the ability now to look for a pullback, right? And then potentially now look for another leg going up in the same direction. So we know we're bullish, bull market tells me I want to buy at support levels, right? So where are my support levels? Well, I'm drawing up my channel. I'm marking up these highs. I'm bringing it down to that low. That's a really nice channel you can use here to buy off of that low. That's a great level of support. We also saw, as you probably can see here, as the market ran higher here, we never pulled back to the moving average. Look at how the market, right? Look at those wicks, right? Big wick, big wick, big wick. See how it kind of went up, came down, went up. Nobody, the bottom line is, if you were waiting to buy that pullback off the EMA, you're still waiting right now. We never got that pullback to the moving average. So I'm also lining up those little swings right there, and those will be levels to watch here as well. So we know we're bullish. We know bull markets tell me to buy at support, and I can definitely see some great support areas down to the low of that channel. What else do we know right now in this market? We also know a lot of these markets have a weekend gap. Well, I guess it's not a weekend gap technically. It's kind of like a holiday gap, right? We had that big move up to close the session off on, this of course be Monday night, and they gapped up. They actually opened lower, right? Never came back to fill it and just tanked right back down. So there's a big bullseye right now right on that gap fill. Now, if you watch my newsletter every evening, you know that I'm not a big believer in using the gaps, right? Just because it tends to play tricks on our mindset. The only time we use gaps is when momentum is already moving back towards it. For example, I would never recommend in a bear market to start buying just because the gap had to be filled, right? I try not to get too aggressive going back to the gap until what? Until momentum confirms it. So we definitely have momentum moving in the right direction. That gap tells me now that will definitely be an objective here for those buyers. But again, I want to make it very, very clear that if we had a bear market today, I wouldn't even be mentioning the use of that gap. The only reason why I'm mentioning it right now is because we saw the bears fail a couple times and the bulls now have control. Once the bulls get it back now we can start taking that gap seriously, right? We're not just buying no matter what direction momentum is just because there's a gap going overhead. And we'll see a bunch more of those gaps in tonight's video. I think the most important thing right now though is we are running out of space, right? We don't have a lot of open space before we get that gap fill. So if you think about it, if you're a buyer right now and you're going, okay, we get this strong move higher here. If I was to buy right now, where would I put my target? My target would probably be somewhere right up here. But if I buy right now, where could I safely put my stop loss to protect my trade? This is a big deal, right? Because where would you put it? And you can't just say, I'd go right here. Yeah, no, you can't say that because the market could easily pull back and keep going higher, right? So a stop loss being used, a shallow stop, is not going to work right here, right? Not if you want to protect yourself against a shakeout, right? Basically a stop and run. Okay, you put a stop too tight up here, you'll get stopped out in the pullback just in time to watch it run without you. So really the only place for me to put a stop right now that has any real structure to it is down underneath this low. Now, I'm not a great math guy, right? But this does not look like a good risk-reward ratio for me, right? My risk is way down here, right? And my reward is just that's all. Now, yes, I know, maybe it keeps going higher, but I don't know that for sure, right? That is a guess. You're predicting, right? You're thinking too much at that point, right? Trade what you see, not what you think. What do I see right now? I see a strong move up. But I see if I buy right now, and again, yes, I could put my stop down here somewhere, but you're fooling yourself to think your trade is protected there. The only place to protect your position is to put it underneath that major low. Now, if I could get a pullback and a failure pattern off that low, then what I could do is I could structure my trade, right? Now my stop could go below that low now. Now my entry could go back here, and now my target could go up around those highs, right? See, that's a much better risk to reward ratio now. So I need something to be able to structure this trade, because as of right now, it feels like we're definitely bullish. And no doubt I anticipate that gap getting filled. But if I buy right now, my risk reward ratio is horrible, and I can't make it a habit of doing that. So I want to buy, but I don't want to buy high, right? Because when you buy high, your risk reward ratios go out of whack. And sure, you might make money on this trade, but one loss with a bad risk reward ratio, and you'll give up dozens of of winning trades. So I don't want to get too greedy up here trying to be a buyer, even though I do think the market still has some room to go. So how do we structure this to buy off a support level so I can use a small risk for a big reward? Well, let's talk about those three different ways the markets move, right? They move up, they move down, and they move sideways. Now, I'd like to have this thing pull back here for me. I'd like to see this thing really give me a nice pullback. A pullback off the high, right, will now allow me to start to structure a trade going long. And again, if I can get down to the low of this channel, what I'd like to do is see if I can get some sellers to commit off the moving average. If I can get some counter trend traders to foolishly sell that pullback, which you can see, by the way, happened back here. Strong move down. You can see the bears came right in at the moving average there, and once they failed, the market took off to the upside. That is very similar to what I'd like to see happen here on crude oil. I'd like to see us pull back. I'd like to get a sellers, right? Some sellers to commit off the moving average. And once we do that, now we can structure this trade. Now I know where the stops of those counter trend sellers are going to be. And now what I can do is I can literally buy right into those stop losses, right? So you're literally buying right into the stops of those counter trend traders. It's a bull market. I want to buy at support levels. And one of the easiest ways to find an edge for your long trades is to trade into the stops of the other side of the market. And again, this type of setup will allow me to risk small to get a much larger reward. That is something I can build my trading career around. That is something that will not wipe me out when one loss occurs. That is something I can build a foundation on. And that's a great looking setup as we pull back for tomorrow. Now, oftentimes those failure patterns, they turn into pullbacks too. So if you're not quite confident, or maybe you simply want to add another few contracts to your position, you can look for this combination setup, which is of course a failure into a pullback combination. One of my favorite ways to trade a pullback is to look for the opposite side of the market to fail, off a key level of support, by the way, and then of course by the pullback that happens thereafter. Now, I should also mention too, right? It's been kind of it was obviously kind of a weird day today, right? The big gap down here overnight. If we do see a real strong move down, right? It kind of gets underneath this channel, right? If we see a real strong move down, now what I'll do is I'll use a slightly different setup, which I call a nested failure. Again, if it really runs lower here, not a reversal, we'll talk about that in a moment, but if it really runs lower on strength, now what I'll do is I'll want to respect the momentum of these bears by letting the bears try once, letting the bears try twice, and then I can be a buyer into their stops from there. And oftentimes, those types of what I call nested failure patterns, they'll oftentimes turn into what I call a two-try trap pattern. So imagine now we see a very strong pullback, right? It goes underneath the low of that channel. And now what happens is, right, the bears come in and they try to sell the underbelly of that channel. Once those bears try twice now I know they're all in the boat, right? And now we can nudge that boat over, right? And literally buy right into those stop losses. Now again, I call this is a failure pattern, but it's a slightly more conservative, right? Because momentum is a lot stronger as the market goes lower. And what I'm doing in this case is I'm simply, again, buying right into those stop losses. Now, a lot of times that failure from the sellers will just start ripping higher. And as it rips higher, I'm looking for a very similar pattern here, right? Literally, it's one try for the bears, two try for the bears, and then grab the trap low. The reason why you want to trap there is because you got to remember overhead resistance, overhead resistance. You need some way to structure that trade, and a trap, the follow-up pattern for this example, right, would be a great way to structure it, buying low, buying at support. So there are 4 patterns, right, as the market pulls back. Now, I know what you're thinking right now. Well, how does it reverse then? Right? What does reversal look like? A reversal would be that same pullback, but now the moving average comes over and the bears will hold on to that pullback, right? Again, we're assuming now the bears will try and fail and run back to the highs here. If the bears can hold this, right, and there's no way of telling ahead of time, if the bears can hold this now if I get a strong move off the moving average, now I can structure my trade going short now. I'm going to draw a trend line off these lower lows. I'm going to put it right up around these highs, right? It's what I call a hidden channel, right? You kind of draw the channel the backwards way, and then I'll look to sell the high of that hidden channel, right? So it's going to be again, I call this a 1, 2, 3 reversal. Strong move down, pull back to the moving average, strong move off the moving average, right? That's where you get the term 1, 2, and 3. Once you get the 1, 2, 3 reversal, then we're looking to sell up off the top of that hidden channel. And my target on this is pretty easy, right? Those lows from earlier today at 15, and then of course, right, we go back down to that low here down to 86 from there. Easy targets there around 51 if these buyers can, or if the sellers, I should say, right, can hold off these buyers. Now, what if it goes sideways up here? You know, anytime we find ourselves getting a little bit too close to these major objectives, right, this overhead resistance, we may go sideways here as well. So what's the plan if we start going sideways? If we go sideways here, double tops, double bottoms, this will be a bull market into a range. What do we do with that bull market into a range? We take the size of that range and we use that to project the buy zone underneath. Then what I'll do is, knowing where that buy zone is, and we'll see some examples of this on the next marks we look at tonight. Once I've got my buy zone, now I want to see a pullback, because what's going to happen is eventually the buyers will stop buying. Eventually those buyers will run out of bullets, as we say, right? Once those buyers run out of ammunition, the market will pull back. I'm waiting for sellers here to try to sell that pullback off the moving average. I call this a 2-try failure pattern, and we're buying below the low of that range. Now keep in mind, if we have this range form and the range starts sitting there a couple hours, right, going sideways there, now we focus on the range. Okay, very important, right? If we don't get a range, we're focused on buying at support levels. But if we do get that range, remember, anytime you see a range on the chart, you know the range is the most important thing. Pull back, sellers fail, right? And we're buying into those stops, going back up into that trading range. Now, as we go higher here, we may see this thing continue to go higher here and go sideways at the high. So be aware, we'll still use that same seller failure pattern below the range if we get stuck going higher. But what if we don't get stuck going higher? Right? What if the coronavirus continues, right? And you know, who knows what could happen here, right? There's a lot that could happen here on the crude oil. What would be some breakout patterns, right? Here's 2 breakout patterns I'm watching for here as we go into tomorrow's trading session. The first one is the most reliable one, and that will be the 1, 2, 3 breakout, right? Same thing as a reversal, but I want to see them pull back to the moving average, and I want to see some real strong momentum coming off the moving average. Now, this may happen a little bit higher up on the ladder. This may happen. It doesn't really matter when it happens, but we have to see this thing pull back to the moving average and blast through that high. Once we see them push through those highs on strength coming off the moving average, now we know it's a breakout. I'm going to mark up that trend line. I'm going to find that hidden channel, and we're buying off the low of that hidden channel. This would not be a 1, 2, 3 reversal. This would be a 1, 2, 3 breakout into a hidden channel pullback. Or if we really get this thing ripping higher, right? If it really rips higher here, if we see a real strong move up, what I can now do is, because there's not a lot overhead, the next major milestone is 53.63. So if this thing really starts ripping higher here, right? If it really runs higher, what I can use is profit taking 1, higher high, short sellers 2. What I can do is I can actually find, right, a small little spike in channel and buy the low of that spike in channel. Now again, keep in mind, the prerequisite for this pattern is that real strong move higher. All right, make sure you understand that. And keep in mind too, right, we don't need a trap, but a trap would be even better, right? I mean, a trap would be even better. A strong move up. The buyers take profit. That's the first pullback. The bears come in for the second pullback, right? A trap low. We call that a 2-try breakout, 2-try trap pattern, right? Getting in. So those are 2 setups I'm watching for, right, as we go higher. Now, could you sell the top of this market? You could sell the top if you wanted to, but you'd have to use a reversal pattern. My favorite reversal pattern, we actually saw an example back here, 1, 2, and go. On a sell side, it'd be a crown reversal short. So we go up, the buyers try once, the buyers try twice, we trap high, and we're selling it back down off that high. Does that make sense, right? So and again, if you want to be a seller in a bull market, you really got to stay patient. You want to let those buyers try once. They didn't retest the high, try twice. They still can't retest the high, trap high on that. I call it a crown reversal pattern. It's really the most reliable of all of the counter trend setups that we use in our trade room. And again, right, be patient if you want to try to sell off this bull market. So boy, we have covered a lot in this first 25 minutes of this video. We know we're bullish. We know where the best levels of support are. We know how to trade failures. We know how to trade ranges. We know how to trade breakouts. We're ready for reversals. We're all ready to go here for tomorrow. Tomorrow morning, 8 o'clock Eastern time, with us as clients in the trade room. And remember too, if you're not going to be with me tomorrow morning, the next best thing you can do is grab that free trading course. You know, tomorrow we'll go over all these details in the trade room, but if you're not with me tomorrow, I want to make sure you get a deep dive into all of these patterns so the next time you come back and watch the video tomorrow night, you'll be able to follow along with me so you know what these patterns are all about. So grab that link in the upper right-hand corner. By the way, I'll put all the links in the description of this YouTube video tonight. And then we talk about, you'll find all the links, right, for tomorrow morning's trade room, our free trading classes. They're all linked up in the description of this YouTube video. So again, tomorrow, 8 o'clock Eastern time, we'll trade it together. That way it's much easier that way for you to do it correctly. If you're not with me tomorrow morning in the trade room, make sure you grab that free course linked up in the upper right-hand corner or down in the description. Let's keep going here. How about some S&P? What do we know about the S&P right now? Well, there's that gap, right? There's that gap, and that gap won't become a major issue here until these bulls can get up off the couch here and get back to work right now. That gap is still lingering there, right, with that big gap down. Now, what is a big gap down, by the way? Think of a gap down as one big red candle. Right? That's all that really is. And so what happens? We see a strong move down into what looks to be like a range, right? Maybe you call it a flag. You know, I don't know. But I'd call it a range, right? We come down, we chop around a little bit, we go back into it, chop around, go back in. So it looks to me like this is a bear move down, right? And then into a trading range. But you'll notice what else we see here. We see the market swing below the range, and then look at the strength of this move going higher. It's a pretty strong move up. In fact, you could say that, right, that time between 12 o'clock and 12 o'clock and 2:30, 3 o'clock was pretty much the best price action we saw out of the S&P the entire session today, right? It wasn't a pretty market whatsoever, which is somewhat common after a holiday weekend as the markets try to kind of get caught up, right, to where they were before the holiday break. The bottom line is we know we have a bear market into a range. But this move higher here is really difficult to ignore, right? So I would definitely say the bulls have a little bit of the edge. It's not much. It is definitely not much, but they do have a small edge on this E-mini S&P. So we know a bull market says to buy at support, right? Buy low, buy at support. We talked about that on the crude oil. What else do we know? We know we have a range. Right? We know that ranges, what do ranges tell us to do? They tell us to buy low, they tell us to sell high, and they tell us to avoid the middle. What is a range? A range is a magnet, right? It's a balance area. So if you imagine a range here, this is your price magnet. What goes down, right, comes back up. What goes up comes back down. I want to buy low, I want to sell high, and avoid the middle of that trading range. You can see right now we're not exactly in a very good location to be trading. We're pretty much right where most of the volume was exchanged here on the S&P. At this point, honestly, considering the fact that if you were to put a volume profile on this, right, you'd probably see most of the volume piled up right there in the middle. And so this is a real tough spot to be trading. We really want to wait right now to see if we can get this balance market to shift out of balance. And to do that, what else do we have? I'm drawing a trend line off these highs. I'm drawing a trend line off these lows. These expanding triangles are really, really powerful tools. Now, this is a very wide expanding triangle. Expanding triangles, as you can imagine, they come in lots of different shapes and sizes. So yes, I do want to sell off the high. Yes, I do want to buy off the low. But the wider this thing gets, the more difficult it is to time your entry, because of that word momentum, right? Momentum becomes a big factor when these triangles, these expanding triangles, right, as we call them, right, as they become wider and wider. So I know I want to be a buyer at support. I want to buy underneath this low. I know I want to sell overhead, but I have this bullish tone to it. All right, you can already see kind of how difficult this environment's going to be, because if I go higher here, I'm now looking very bullish, but I'm running into resistance. So how do I sell off the high of that range when I've got all that momentum running higher? Or as we go lower, right? If we get this run all the way down to that low, that's going to be one hell of a move lower. And I don't know how confident I'm going to be trying to buy off of that low, right? You can see how, again, this is a challenging one, right? You definitely see how challenging it is. And it all has to do with momentum and how the market kind of rotates back and forth here. Won't always be this difficult, but because this triangle is relatively wide, we have to account for it. So what if we go up? What if we go down? What if we go sideways? If we go higher, right, as we go higher here, the only way that I can sell off this high, because we have all of this bullish momentum, is to use that nested failure pattern that we talk about on crude oil, right? When we talk about oil, on that nested failure, if this thing runs higher here, the only way I can really sell it, because again, you get all this bullishness, is to wait for the buyers now to try twice. Right? Try once, try twice, and then I can sell it back down again. It just requires some patience, right, as we go higher. Whatever I do, I don't want to get too aggressive being a seller off of that high, because that momentum will be so strong. Now, as we go higher here, is there any way to buy this thing as it goes? Absolutely. And obviously, this is where that gap will come back into play, right? If we can get and go, that gap at 33.88 is a very easy objective to assume for the buyers, but we need some proof. What's the first one we can look for? A 1, 2, 3, you got it, 1, 2, 3 breakout. Strong move up, pull back to the EMA. Then what I can do is mark up that high, mark up my low. And as I always say, these types of setups, you're going to want to stay patient for this 1, 2, 3 breakout. But then don't wait too long on the pullback. Get aggressive when the market pulls back to the low of that channel. Or you get that strong move higher, right? And this is where we may just see this market open up for whatever reason, and it may jump. If it jumps higher here now, remember, you always got to know where you're trying to get to. You're trying to get to that high. You're getting pretty close for comfort up there. What's the best setup to avoid buying high? A trap pattern, right? So traps now become my go-to setup if we get that real strong move. And usually this will be just below the moving average, right? And usually there'll also be some sort of hidden channel there, right, as well that you can draw off of. Now remember, if you peel back all the extras here, it's a 1 try, 2 try, higher high in price with that lower, right, with that trap low. And again, it will usually be just below the moving average as we go back up to retest that 33.88. So now we've got 3 scenarios, right? One is that nested failure to sell off the high. The other, of course, would be that 1, 2, 3 breakout with a hidden channel pullback, or that 2 try trap pattern to make sure we're not, right, buying very low now, or buying high. Now there's also a chance too that, again, anytime we know we've got overhead resistance, there's a chance it may jump up and go sideways up here. So if we do end up sitting at the highs going sideways, just simply mark up your channel or mark up your range, find the buy zone, and again, I'll help you with this tomorrow morning in the trade room, and then of course we'll buy off that buy zone using that straight up seller failure, right? What I call a 2 try failure pattern. It's pretty simple, right? Once you find a range, just look for a breakout, wait for those breakout pullback sellers to commit and buy into their stop losses. We're always looking for an edge, and one of the easiest edges you'll ever find is when you see breakout traders, not just breakout traders, counter trend breakout traders getting caught on the wrong side of the market. One of my favorite ways to trade ranges is to use those. Again, they're basically breakout pullback failure patterns. I call them 2 try failures. Now, what if we go sideways here? If we go sideways here, right, we sit on hands, right? Now, one thing to keep in mind is, what if we go sideways here for quite a while tomorrow, right? What if we sit here for quite a while overnight, right? That if we sit there for a while, that's going to really absorb a lot of those bullish momentum, right? Right now, the market feels very bullish. And so if it runs higher here, we have to assume a lot of people are going to think this is bullish still, and they're going to be buying pullbacks, right? But if we sit here and go sideways and chop, 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 chop around, right, now it's almost a flat market now, which means I can sell high by using buyer failures up inside the sell zone, right? I can buy low by using seller failures, right, below down in the buy zone. Again, all you're doing is you're waiting for the breakout. You're waiting for the sellers to get caught trying to trade that, right, that breakout pullback, or you're waiting for those buyers to get caught, right, trying to buy that breakout pullback, and you're simply selling right into those stop losses. Now, another factor to consider here is if we run lower here, right? As we run lower, that low at 55 1/4, that trend line down here, that really becomes a great spot. However, if this thing really runs lower, how can I buy it? It's going to feel really bearish down here, right? It will. If it turns around and goes running lower here now, this is going to feel pretty darn bearish. And because it's so bearish, right, I still want to buy low, but I have to use, what was it called again? That nested failure, right? Again, it's all about momentum. And because it's such a wide range here, momentum will be a factor. Let those bears try once, let them try twice. Then I know where their pain points are, right? Then I know where their stops are, and now I can buy right into those stop losses. And remember, a lot of times those nested failures, they wind up really running higher into a 2 try trap pattern, right? Very, very common to see these two setups back to back. A nested failure, which is just a failure, right? Double, right? It's a nested, a failure inside of a failure. And then, of course, a trap low. These are very, very common combinations as momentum swings back and forth. So now we've got a pretty good idea of what the plan is for tomorrow, right? How to fade the breakouts, how to trade the breakouts, how to use momentum, right? So you know what setup will work best to buy low and sell high. And again, tomorrow morning, we'll do all of this together together. But if you're not with me tomorrow, grab that free course I mentioned earlier. It's linked up in the upper right-hand corner. That way, as part of the free course, you'll see hundreds of examples of how we apply these setups to our favorite futures markets. You'll learn all my favorite patterns as part of that free trading course. And again, all those links are linked up in the description of the YouTube video. Let's keep moving. Get the S&P all ready to go here. How about some Nasdaq? Now, the Nasdaq's in a very similar scenario here, right, to the S&P. What do we know about the Nasdaq right now? We know the Nasdaq course had that big gap down, right? A gap is nothing more than one big red candle, right? So we know the buyers had that big move down. We also know the bears tried once, tried twice, right? There's that crown reversal we keep talking about. And you can also see too, right? They got that big 1, 2, 3 reversal off of that low, right? So we could definitely see the bulls have momentum on their side. But what are we worried about right now? We're worried about that gap acting as resistance. We're worried about those highs acting as resistance. I'm worried that if I buy here right now, the only place for me to put my target would be, of course, up here, and my stop, it can't be back in the middle there. It's going to be way down here, right? That's not going to be a very good risk reward on this, right? So I have to do something different than that. It's not going to be a very reliable spot for me to be trading, because if I can't structure a good risk reward ratio, I'm not going to be the only one that has that problem. Right? Think about it that way. If I can't get a good risk-reward ratio here, then nobody else can either, right? Which means you're either gambling with a big account, right? There are a lot of traders who have big accounts, right? And they can afford to buy here, right? They can afford to put their stop down here and put their target up here, right? A lot of big lot traders, they can play that game because they can just buy more as it goes lower. But for the average person, if you have less than 6 figures in your account, you've really got to be careful with how you manage your risk-reward ratios, because you've got to be willing to take every setup that you see. If your risk is too great, you're going to run out of capital real fast, and well, you won't be able to defend yourself, right? That's where bigger money in the markets can really throw their weight around, so to speak. So bottom line is, we know we're bullish, but it looks like we're a little bit too high to be buying right now. A little bit too high to want to buy here right now. What else do we know on this? We know we have a range. Now, I'll be very honest. This range I was on the fence about. Anytime I see a bull market that goes double top and then double bottoms on it, I always look for that as a range. I always define those expanding triangles, right? So triangles are really potent levels of support, right? We may not get that triangle as a support. So instead, I'm going to mark up these highs, bring it down to that low. Now that is a level of support that we can definitely have fun with tomorrow, right? That level of support looks great as well. So we know we have a potential hidden triangle here, right, for support. And we'll talk about how to trade that here in a moment. We also know we've got that hidden channel, right? And that's probably the one that is most realistic here for us to buy off of, right? Got my buy zones, got my sell zones, and again, I know where I have some resistance here overhead. I don't want to be buying right too high up on this chart right now. So what happens? We go sideways, right? Up, down, sideways. Let's put all 3 of these plans together. What I'd like to do is, it's the same idea we saw on crude oil. I'd like to get us to pull back off this high. I'd like to get these bears coming in, try to sell off the EMA so I can buy right into those stop losses for a failure into a pullback combination, right? That would be ideal. Get that pullback down to the low of that hidden channel. Look for that seller failure pattern right off the low of that channel. And again, this may really pull back down to the low of that triangle. If it really pulls back here, real strong pullback, now what do? That momentum becomes a factor. If we really run down to that pendulum swing, now we know, wait for what? Wait for the nested failure, because you want to respect momentum, 1 and 2. And then keep in mind, oftentimes these things will just rip higher once those bears fail on that situation. You don't want to chase after it. You want to look for that 2 try, trap pattern, right? It's a nested failure into a two-try trap, almost identical to what we talked about on the oil, right? So a relatively shallow pullback, momentum does not become a big factor. I can look for a seller failure and a bullish pullback going back up to retest the high. Or if we really take a nosedive here, right, look for those one try for the bears, two try for the bears, and we're just simply buying right into those stop losses as we go higher. Now, I'm sure you're wondering, how does this thing turn bearish? Well, first of all, if we see a strong move down, that's the first step. Then a pullback to the moving average, that's step number 2. Then a strong move off the moving average. That, of course, will qualify what I call a 1, 2, 3 reversal. Now, once we get the 1, 2, 3, then what I'll do is I'll mark up that low. I'll go up to those highs, right? Not the medium-term high, the higher high there. Find that hidden channel, and we'll try to sell off the top of that hidden channel, right? Now, again, these types of reversals, I realize it's very tempting when you see a strong move back, right? When you see a strong move lower, it's very tempting to want to sell that first pullback, right? But look left. The last time we saw a pullback and went back to the moving, it failed and ripped right back up again, right? So we cannot assume a strong move down is going to be enough. We have to wait for it now to jump off that moving average, thus signaling now the buyers have walked away and the sellers have taken control. Then I can mark the low, I can mark the high, and I can sell off the high of that channel. It's called a 1, 2, 3 reversal into a hidden channel pullback. It does take some time for it to set up, but then once it sets up, you got to hit it hard off the top of that channel because you'll probably only get one shot to do it. So once we've got that covered, what if we go sideways up here? It's possible, right? It looks like we're running right into that gap right now. So, I think we have a range right here, but what if we jump up and start going sideways here? Doesn't matter to me. Right? If we start going sideways here just below those highs, or if we go up and start going sideways, right? So we start seeing a range up here. It's a bull market now at that point into a range, right? Now what happens when you see a new range? The range is the key. The range is the most important thing. We take the size of the range. We use the size of that range to find the buy zone. Right? Once we know where our buy zone is, we wait for those buyers to run out of bullets, right? As I say, right? Eventually the buyers will stop buying once they realize they're not getting anywhere, and the market will pull back. Once it pulls back, those counter trend rookies, I know because I made this mistake all the time, they're going to come in and think this market's reversed, and they'll try to sell that pullback. And once they do, we got them. We got them exactly where we want them, right? It's like a mixed martial arts fighter, right? Using the body weight of their opponent to put them in I'm not much of an MMA guy myself, I apologize, right? To put them in some special sleeper tap out hold, whatever position they do to get a TKO, right? So that's the thing. What we're going to do is we're going to wait for this run lower, right? All that blood, I can't watch it, right? It's not my cup of tea, right? But I know a lot of you guys probably do enjoy that stuff, right? But again, like an MMA fighter where they use the body weight of their opponent, right, to kind of slingshot them into a position they can take them down. It's the exact same idea here. We wait for that move lower. We wait for those bears to come in and try to sell off of it. And then when they get stopped out, that momentum swings right back up, right, and slams higher. Okay, great setup there if we go sideways. And again, this might be up higher here, right? It may run and go sideways up here. Same idea no matter where it is. Or, right, maybe we see, as we open up here in Asia, maybe we see it runs up, 1, 2, 3, break higher here, right? 1, 2, 3 breakout, mark the high, mark the low. We're buying off the low of that channel. That's an easy setup. Again, you got to wait for that strong run up because that strong blast off the moving average will tell you you can rely or you can trust that pullback. Or we see a real strong run higher here. Profit taking for the bulls. Higher high, trap low. What's that pattern called again? It's called a 2-try trap pattern. Now, why a trap on here? Because you're back to all-time highs now, right? If we had, if I had a wide open space up here, for example, right? If this was the next level of resistance overhead, and I saw this thing run higher here, yeah, that would be a great example where we only need to get the 2 tries, right? Just want to see bulls take profit, bears come in, then I know where stops are, a nice juicy candle, right? And I can use that off the low of that new spike in channel, right? That's an easy setup, but you only want to take those setups when you've got a lot of open space, right? We don't have that luxury right now. So as we go higher here, it'll have to be, at least to be conservative here, it'll have to be a trap high or trap low, right? So higher high into a trap, and we'll usually come just below that moving average, right? A lot of times on the low of a new hidden channel. All right, guys? So now we got a pretty good plan here, right? How could you sell it as it's going higher? Could you sell it? You definitely can, but you better wear a helmet and a mouth guard, and you better make sure you use the right pattern, because we know that selling a bull market is a recipe for losses, right? So as we go up here, wait patiently for the buyers to try once, pull back, lower low, try twice, and this is where the magic is, right in that trap low. Right? Again, you can see an example of this pattern going lower. We go down, bears try once, bears try twice, right? It's that trap. It's that trap. That's where the money is. That's where the reliability is. On the other side of the coin, right, it's up here, right? It's that strong move up. Buyers try once, buyers try twice. It's that trap high, because that's where professional buyers are not buying, right? You're selling at the very edge up there to ultimately to protect yourself against buyers at that point. Oftentimes what happens is it will easily run back down to retest that low, and by then grab your 1-to-1 and leave the runner back down into that trading range. Again, we'll go over all of these patterns again tomorrow in the trade room. If you're not joining me tomorrow in the trade room, the next best thing is to grab that free course linked up in the upper right hand corner, or in the description of the YouTube video right now. All the links are linked up there for you as well. All right, we're looking good here. Wrapping things up here right now over on the gold. Gold is looking parabolic on us tonight. What do we know about gold right now? We know that gold is bullish. It's difficult to call this a bear market right now. That's for darn sure. So we'll definitely say we're bullish, right? We know that one very big clue on this is look at the slope of that moving average. Look at how the moving average began very flat and then got steeper and got steeper and got steeper. If you see a moving average like this getting steeper and steeper and steeper, we call these parabolic moves, right? This is just a one way of describing it, right? It's a runaway. It's a strong run. Now, whenever you see a parabolic move, right, the first thing you want to do is don't try to call a top on this market, right? I'm sure most of you, if you're watching this video right now, you probably have made that mistake, right? Just because the market went really far doesn't mean it will reverse, right? It does sometimes, but it's not a guarantee. So trying to call a reversal on this is quite insane here on the gold, especially considering the fundamentals with the coronavirus around the world right now. So we definitely know, right, there is some concerns about being a seller. We want to be a buyer, but this thing is so high up, right? It is so high up. They blew right through the first measured move, right, and kept on going. So anytime I see a parabolic moving, you see there's the prior high all the way back there at 1598. So quite a big move. And, typically, whenever I see a parabolic move, I know I want to be a buyer. I don't want to be foolish and try to be a seller on this. There are usually 3 scenarios that you're anticipating with a parabolic move. It all starts that strong move up. Most of the time, you'll see a range, right? Usually when you see a strong move up, you'll see a range like this, and you'll buy below the low of that range with a seller failure pattern, right? So most of the time it's a range, and we'll buy with a failure pattern. Other times the flag, right? Flags are a bit tricky. The key to flags are getting above the flag, and then buying basically the breakout pullback. We'll talk about that here in a second, right? The next one is going to be a strong shot lower, right? So basically easy come, easy go, right? Strong move up, strong move back down. It's not a reversal, so to speak, right? It's just a, kind of a profit-taking snapback here, right? And when that happens, you want to wait for that nested, right? Because, as you can imagine, it's a very strong move down, right? So these are 3 things I'm looking for. There is potential. It may keep grinding higher here as well, so we'll talk about that here as well. But these are really the three scenarios here that you want to really memorize whenever you see these parabolic moves, right? And again, a parabolic move is just simply when a market becomes, it's bullish, it's more bullish, it's more bullish, now it's even more bullish, right? It just, for whatever reason, right, the fear in the market drives the market higher here. Short sellers, they get caught trying to call a top, right? You can see a great example of that strong move up of that 2-try pattern, right? We talked about earlier. So we know there are sellers who tried to fade this move. They got run over. That's probably why it got so aggressive going higher. Now, normally in these scenarios, the range is your best friend. So as we go sideways up here, right, we already know there's a high likelihood for a range, which means I'm simply waiting for these buyers in a bull market, right, to run out of bullets. I'm going to wait for that pull back now below the range. I'd love to use this 98.5 or that prior high that we saw earlier, but really what I need is I just got to get off these highs, get those bears to take the bait here, right, and see if we can't, right, just buy right into their stop losses. It's a very, very simple setup. We see this stuff over and over and over again. So if we do see it continue going sideways here, then we know just simply wait for those buyers to give up a little bit, wait for the market to pull back, and when it pulls back, just simply wait for those bears get caught looking, right? They'll try it. They'll try to sell this thing back down. I don't know why they keep trying, but I'm glad they do because it makes my job very easy, just simply buying into those stop losses. The other thing you want to keep in mind here, right, if we don't get that range, and you can almost kind of see it happening here already, right? You can almost kind of see it, right? There's that, this might end up flagging here. And if it does flag for us here, now what you want to do is you want to think about, if I was a seller, where would I be trying to get short? Now, I know we're not bears in this, right? A little pullback like this is not enough to get this reversal. That makes sense, right? It's got to really run lower before I can try to sell this market. But one characteristic about a flag pattern is a channel, right? And when I was a rookie, I thought that anytime we saw lower lows and lower highs meant a bear market, right? Well, sometimes, not always, right? I mean, you could easily have this thing running higher here, lower highs and lower lows. Is that a bear market now? No, right? It's a bull market, but it's just pulling back. Why? Because nobody wants to buy way up here. It's way too expensive up here. So these flag patterns, these can be really tricky if you're not prepared for it. So again, it'll feel, it's the characteristic of a flag pattern is it's very sluggish, it's very slow, and the channel will be very narrow, right? It'll be a very narrow channel. And then what we want to do is you want to think about it. If I was a seller, where would I be trying to sell? I'd be trying to sell right up around those highs. This is the trick to a flag pattern. The trick to a flag pattern is you look for that trap above the swing. That's going to be where bears get in, right? That's where the aggressive bears, they're trying to sell this sucker and run it back down, and they're going to do their best to sell as high as they can, right? They'll try to sell above that trap. Okay, just like I would want to buy below trap, right? We talked about this many times already. Once those bears take the bait, though, now we know they're in. And now we know where their pain points are. Now we know where their stops are, right? That's the secret. The secret of flag is a lot of people talk about, well, you got to buy the break out of a flag, right? So a lot of folks will buy right here. And, most trading books, most of the, day trading for dummies 101 baby stuff will say, just buy the break of the flag, which is great. But a lot of times what happens is you'll see another round of sellers come in right off that high, right? You don't want to try to predict this flag. So what I do is I don't try to predict it. I wait for those bears to show me proof. And then I know exactly where I'm buying now, and I'm buying right into those stop losses, right? Target, of course, is back to retest the high. I can structure my trade now with a good risk-reward ratio, as we talked about many times already in this video. That's my favorite way to trade a flag pattern. And sometimes what will happen is sometimes those bears will come in, they'll hit it, and it will just collapse right back down in, right? So if it does collapse, remember, it's a 1, 2, 3 move, right? We don't just predict the reversal. We wait for that strong move down. We wait for that pullback, and we wait for them to hold it. If they don't hold it, what's going to happen? If they don't hold this, what do? We're going to buy it right back up to retest the high again. Okay, so if we go lower, 1, 2, 3 off the EMA. That's the key here, right? You want to see those bears come in and hit it off the moving average. Then mark up that low, mark up that high. At this point, it's a bear market now, and we're selling off of that high, right? Now, the last scenario you want to be aware of here is if it just shoots lower. Okay, again, easy come, easy go. If it shoots lower, yes, we'll wait for that confirmation, and then we'll trade off the high of that channel. But it's not a bear market yet. It's just a deep pullback. So in that case, wait for the 1, wait for the 2, you got it, and then buy into those stop losses from there, right? It's called a nested failure. And then again, oftentimes these will rip higher into a 2-try trap pattern. Make sure you grab that 2-try trap pattern before we get where? Before we get back up to retest those highs. All right, guys? Boy, a great plan of attack here for the gold. Last but not least, if it does keep grinding higher here, I will look out for new spiking channels, right? If it does keep grinding higher, I will look for buy setups off the low of a new spiking channel, and we'll navigate from there tomorrow morning with all the clients in the trade room. Don't forget, 8 o'clock Eastern time tomorrow morning. I want to see you there with us. We had a great day today in the trade room. Another big day coming tomorrow. I'll put all the links to get registered for tomorrow morning's trade room in the description of this YouTube video. I'll also put the link right to that free trading class if you're not quite ready yet to be a client. Don't be afraid to call that toll-free phone number, and I can help walk you through the entire registration process for tomorrow. We got live support there as well. I'm always standing by to help you guys out. So how do we do? First day back after a break, right? Had some cobwebs on me. I'll definitely give you that. Hope you learned a lot here tonight. Don't forget, hit that thumbs up button for me. Subscribe to our YouTube channel. Drop those questions in the comment section below. No matter what you do, though, get registered for tomorrow morning's trading session. We open up at 8 o'clock Eastern time. We'll do it together. If not, grab that free trading course, learn this trading strategy, and we'll see you guys in the next newsletter video. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.